Everyone's talking about rates and what's happening in the market. Yeah. What are you seeing in the market right now in terms of fixed rates, variable rates, forecasts for this year?
Yeah, I mean, we get that question all the time. People often say, am I better off with a fixed rate mortgage or a variable rate mortgage? And my answer back to them is always, it depends on your risk tolerance. Right now, for every 10 clients we talk to, literally 5 are going fixed, 5 are going variable. Obviously, with the current state of the world right now, a lot of uncertainty right now. So if you're of the belief, there's going to be volatility to continue moving forward and you're comfortable with getting a fixed rate and just want to lock it in and forget about it, it's not a bad idea. But you also have the other thought process where if there is potential cracks in the economy, which some people do feel, the Bank of Canada may need to cut rates in the future. Again, we don't know that yet. And if that happens, variable could be the better choice. So again, this depends on the actual person.
What's the difference right now, like the rate differential, if someone's going fixed versus variable? Like right now, they're saving money by going variable, correct? It's just you're taking
right now
more
they
risk.
Are. That's correct. Yeah. So variable rates right now are kind of hovering in the, call it 3.6-ish range. Okay. And fixed money is kind of in the high threes, 4% range. So I would say the spread right now between a variable rate mortgage and a fixed rate mortgage is probably like 30 or 40 basis points. So for some people, they're like, well, that's not that big of a spread. I'm going to take fixed. But if you take a variable and you're saving 30, 40 basis points and the Bank of Canada does cut rates in the future, that could be a difference that ends up being, 60, 70, 80, so on. So
that's on $1 million mortgage, let's say, that 30, 40 basis points.
Yeah.
What kind of a difference would you be looking at over that term of that mortgage, do you think?
Yeah, that would be approximately about $300 a month.
A month difference.
On that, yeah. So now a lot of people can take a variable rate mortgage and then lock it into a fixed rate in the future. All right. So there is one big misconception about variable rate mortgages that, your payment's going to change. Yeah. It's not necessarily the case. So with variable rate mortgages, the payment stays the same. Yeah. It's the allocation of principal and interest that changed. So from a cash flow perspective, it's the same as a fixed rate mortgage. You're paying the same every month. But with a fixed rate, payment doesn't change, rate doesn't change. With the variable, payment doesn't change, rate can change.
Right.
That's the difference, right? And with what we saw during COVID and so forth, there was obviously a lot of people saying, okay, I'm going to take a variable at, 1.2, 1.3%. The next thing you know, that rate's like 6-7%. Obviously, nobody knew that was going to happen, but here we are later, kind of, and people coming up with these renewals, and now dealing with these with the higher rates right now.
What kind of risk do you foresee in terms of rates going up this year? I know it's very hard to predict, but
yeah, I think the narrative has changed the last few months, especially with the geopolitical issues in the Middle East. So prior to that, the bond market was quite stable. The bond market essentially dictates fixed rates. So as if the bond yields go up, fixed rates go up because the cost of funds go up. So over the last, I would say 6 weeks or so, the bond market's probably gone up 40, 50 basis points, right? Yeah. And that's primarily due to inflationary concerns with the price of oil going up. So if things subside, we could see the bond market stabilize, even come down, right? But if things stay the way they are, intensify, it could trigger rates going up in the future. Again, we don't know that right now. So it's just in a very uncertain, volatile time right now.
And the variable rates are based on the Bank of Canada rates, right? And that's more based on our own.
That's correct. Yes, the variable rates are based on the Bank of Canada rate. Bank of Canada has, when they have their meetings, they'll either stay neutral, increase, or decrease. So right now, the expectation is they may hold the way they are. So with the variable rates, again, this is based on your risk tolerance. If you're of the belief that the economy is going to get worse, Bank of Canada may need to cut rates to stimulate the economy moving forward. If you're of the belief that these inflationary concerns are going to get worse, then they may have to raise rates. And this is like a real time where it's literally nobody knows. And hence why we're seeing 5 out of 10 people going fixed. And it's never like that. Usually, depending on market conditions, we kind of see a trend, because the product choice that someone makes is indicative of the time they're choosing. Yeah. Right? Yeah. So right now it's 50-50, typically not the case. There's usually markets where you see big chunk going fixed, less going variable, or vice versa. Right. And right now we're kind of seeing half and half, and that's primarily due to the uncertainty and the small spread between variable and fixed.